welcome to Venture Capital with me, Katie Pilbeam. It's been a busy business week. We've had the Chinese currency, the yuan, taking over from the euro. Yes, the second most widely used currency in the world. We're going to delve into details and get analysis in just a minute or two on that one. We're also going to be talking about Ukraine because we know the protests, they're ongoing, and it means for the economy, it's gone from bad to worse. It's fragile as it is. Again, we're going to delve into detail on that one. We've also got the fact that Russia's biggest employer, Russian Railways, it's slashing jobs. What does that mean exactly? Corporate news to come. Our in-house investor, Mr. Sean Thomas, he went all cautious on us last week. He was heading towards the financials, so we'll see how he's been getting on. But first, I want to start with the Chinese currency, because as I say, it's now the second most widely used currency in the world. So it's below the US dollar, but it's overtaken the euro. So what exactly has happened in the last year then? Well, I can tell you that last year its share of global trade was just over 1%. Now, if we fast forward, it's reached almost 9%. So what's happened to the euro in contrast then? Well, last year it had almost 8%. Now it's got just over 6%. Now, this is coming at a time when China is changing things up a bit. It's in a state of transition. Now, we know that the state is loosening controls on exchange rates as well as borrowing costs as well. So I wanted to get expert analysis. So I'm going to speak to David Kuo. He's from Motley Fool, and just see. So, David, I want to know, when the euro was first introduced, it was supposed to rival the US dollar as the global reserve. We've now got the yuan overtaking the euro. So do you think that that dream is well and truly dead?
What a wonderful question. I think as far as the euro is concerned, I mean, the euro has probably shot itself in the foot because the countries within the eurozone, when they are dealing in international trade, they perhaps, weren't as strong in deciding that the rest of the world should use the euro as the base currency. In other words, when they wanted to buy goods from China, they were quite happy to actually buy goods based in US dollars. So really, I think the eurozone hasn't been as forceful as they could have been. Had they done so, then maybe the euro would have been more freely traded. But at the moment, I mean, the euro is still quite freely traded in comparison, say, to the yuan, which is not as freely traded, because there are still some countries in the world that might say, if I want to do business with China, I would much rather deal with them using either the US dollar or some other kind of currency. So in answer to your question, what is going to happen to the euro? That really depends on what the eurozone decides itself. Does it want to be more forceful or not?
And David, we know the whole reason we discuss money is because it's all about power, isn't it? And what does this transition mean in terms of power for China? Because we know they are in a transition period at the moment as an economy.
That is a wonderful question, and this is really the crux of the matter, because at the moment China is sitting on around $3.5 trillion US dollars worth of foreign reserves. Now, China doesn't really want to increase that amount of foreign reserves, which is why it is trying to make the yuan more tradable. In other words, when you buy goods from China, China is saying we're going to denominate that in Chinese yuan so that we don't have to sort of keep on taking in all these foreign reserves. Now, eventually, China, as you quite rightly say, is going to move from being export-led to becoming more consumer-led. In other words, it will have to spend some of those foreign reserves in order to buy foreign goods. But I suspect, China really doesn't want to run down its foreign reserves too much, but it would much prefer to use Chinese yuan, which it can control itself. It can print as much Chinese yuan as it wants to. So if it wants to start buying goods, from the outside world, it may decide, that it wants to use the Chinese yuan to buy that. But in order to do that, the Chinese yuan has to be more freely traded. And this is really the first step. I mean, we're seeing now that the Chinese yuan has overtaken the euro in terms of trade finance. The next step will, of course, be the Chinese yuan being more freely traded around the world. And that is also happening because, I mean, we have all these deals now between the People's Bank of China and the Bank of England and the European Central Bank and, of course, many banks out here in Southeast Asia.
Yeah, times are changing there. David Kuo there, thank you ever so much for talking to us. Always appreciate you coming on the show, David. Have a great day. Ukraine is still enduring the biggest political crisis in nearly a decade as the fallout over not joining the EU free trade zone continues. Meanwhile, the economic state of the country faces collapse if the situation does not stabilize soon, with Ukrainian bond yields soaring and the price of insuring against a default on government debt surging. There's also the threat of strikes, which could further damage the already fragile economy. So let's now speak to David Bruno from First National Innovation Brokers. Daniel, what I want to know is how bad is Ukraine's financial situation right now? Is the economy really heading for a default?
Well, the situation is really is serious. Ukraine is running a current account deficit of 8% of GDP, and its June 2014 dollar bonds are paying 19% interest. And what that means is that the markets are expecting and anticipating a default by Ukraine. So it is a very serious situation. The Ukrainian central bank is almost broke and doesn't have any money and won't be able to support the Ukrainian currency going forward unless Ukraine gets credits immediately.
Why is Ukraine right to not join the allegiance with the EU then? How has their economy benefited by choosing not to do that?
The problem with the EU agreement were the strings, all of the strings and conditions that were attached. This is why the president could not sign the deal. There were conditions that the subsidies stopped for the consumption of gas in the Ukraine. That would have been political suicide for the president, and that Timoshenko be sent to Germany. One of the goals of the European Union is to bring back the Orange Revolution and to have the current government leave power. That's why they couldn't sign the deal.
Why do you think we are seeing so many people on the street right now in Ukraine protesting?
The protesters have laudable aims. They want the rule of law. They want to see their country become a prosperous country. They look longingly to the West and they say, why can't we be like that? To some extent, they're naive. They are looking at Europe through rose-colored glasses. Europe is sick. The European Union is sick. It's falling apart. There's 25% unemployment in Spain. I don't need to talk about Greece. I don't need to talk about Cyprus. The European Union has serious financial problems that it cannot resolve. The European Union is not a panacea. But what this really is, Katie, it's a referendum on not so much the association agreement with the EU, but a referendum on Ukraine itself and the government. People are not happy with their lives. The economy is shrinking, it's stagnating, and no matter who's in power, when the economy is not doing well, the people are not going to be happy. That's why they're out in the streets. They want to change.
Thank you, Daniel. Thank you so much indeed for your time. We really appreciate it. The BRIC countries, yes, the famous acronym coined by the former Goldman Sachs economist Jim O'Neill. Well, he's now created another group of emerging economies that are set to take the global economy by storm, the Mint. Now, the BRIC originals were, of course, Brazil, Russia, India and China, and then later joined by South Africa, the dream team to make it the BRICS. But in recent years, all of the countries have experienced disappointing growth, and these countries now have some serious competition from Mexico, Indonesia, Nigeria and Turkey, yes, the Mint. Now, I asked BRIC expert Barry Gills if he thinks the Mint is the new BRIC.
No. I mean, the BRICS were a category that was created by someone in the financial system because they had in common that they had high growth rates and prospects, large domestic markets, dynamism. But now you can extend the category and add Mint. It's just actually adding on another group that have a similar characteristic at this particular time. But that doesn't mean that the old BRICS lost their trajectory in the world economy, although they have all been showing signs of some weakness in recent months because the global situation is not good, and the crisis in the global system is continuing to work itself out over many years, and that affects everyone, including the BRICS.
Now let's get all corporate and talk about the fact that this week saw the launch of Russia's first ever smartphone. Yes, it's called the Yota phone. It has a dual screen with a traditional LCD colour display on one side and an electronic paper display on the other. So similar to Amazon's Kindle device on the one side. It's now available in Russia and several other European countries. Its retail price is around $675 in Europe and $600 in Russia, which is actually slightly cheaper than top competitors like Apple iPhone 5 and the Samsung Galaxy S4. And Russia's largest employer, Russian Railways, has put a third of its employees, around 300,000, on shortened working hours. The head of the monopoly, Vladimir Yakunin, says that the part-time schedule is necessary given the current economic climate and the decline in rail use. And Russia's central bank wants Masterbank declared bankrupt. It started proceedings at the Supreme Arbitration Court. The regulator revoked Masterbank's license 2 weeks ago. 7 banks in Russia have had their licenses revoked since the summer when the central bank appointed a new head. All right, let's get over to Sean Thomas. He's poised at the business desk, as always, to tell us all about what you've been up to. Sean, I was just telling everybody about the small financials here in Russia. There's been a real clamp down on standards. A lot of them are going out of business. What does that mean for you? Because you went in on Sberbank, didn't you, last week?
Indeed, I did. I went 50% in Sberbank and 50% in Gazprom. And I'll tell you what, this is good news for me from the Sberbank side of things, because there's more than 1,000 banks in Russia. And, of course, the government kind of doing their clamp down means that the bigger banks, VTB and Sberbank, they are guaranteeing the assets of these smaller banks, which are being shut down. In fact, I was part of one of those smaller banks, and this is about all that my card is good for. I turned it into a Christmas ornament. So I was victim to all of that as well. But that means they're going to be going to the big banks, which has done good for me. In fact, Sberbank is up 1% this week. That did well for me. However, Gazprom down 3%. So I lost total $154, bringing my overall total to $12,461. Still up, but I lost this week for the first time in a couple weeks running. So some good news and some bad news.
Yeah, got you. Yeah. Okay, so you lost out this week, but you're still up all over. So we need to really kickstart this once again, because Bitcoin was a real winner for you, wasn't it?
Indeed.
So how are you going to diversify now? You're going to stick with the financials, or what?
Indeed, I'm going to stick with the financials. I'm going to go 100% all in because for a couple reasons. A, with this movement towards the bigger banks, that means there's going to be a push for Sberbank. That's going to be good for me. Plus, if you remember, everything kind of slows down and there's not much business happening in the new year. So I'm hoping that staying with the financials will be a good decision for me as we push into the new year. So that's what I'm going to do.
Sensible, Sean. We like it very much. So well, best of luck with that. We're going all on financials, and we'll see how you get on next week. Mr. Sean Thomas. And Sean will be back next week as we're live. We're going to be seeing if another Russian bank fails, as well as the protests in Ukraine. We're really keeping an eye on that one and seeing how the situation progresses. Plus, lots more surprises, of course, and I will indeed be back. I expect to see you as well. Have a fantastic week and enjoy the rest of your weekend. Goodbye for now.